Hello everybody and welcome to the weekend report brought to you by Forex Live today for Sunday 17th of July 2011, a review of last week and a look ahead to next week. Let's begin with the euro, and as we can see from the chart, earlier on in the week we dropped out of our previously discussed triangle. We then went down and broke this key level here at 140.20, or let's call it 140, which was a signal for a short. This is where the fireworks and the news really began. The week started for the euro with the market reacting, or continuing actually, not so much panic, but the concerns over the sovereign debt crisis in Europe. We have not only Greece, Portugal and Ireland, but we have Italy in some trouble now, and also Spain. The contagion seems to be taking effect out there, so ongoing concerns there. But it was the US dollar related news that really drove the market from Tuesday, when we saw this initial reversal, through Wednesday, and it was Moody's placing the US on credit watch for a possible downgrade if they cannot get their debt ceiling raised. We also had Ben Bernanke, the Fed chairman, perhaps leaving the door open for further quantitative easing. So the stimulus in the equity markets, known as QE1 and QE2, has come to an end. Now, because the economy in the US the recovery is slower than expected, he says he is leaving all of his options open. Now, the market has taken that to mean possible QE3. That means more money, more printing. This is not good for the US dollar. It devalues the US dollar, therefore it weakened, and it weakened a lot. So we've got fundamental news releases really driving the price action here at the moment. As we have been saying on the website, we are taking profits at regular intervals. We're pretty much taking profits every 100 pips on these positions. There's no real long-term direction in any of the major currencies, or really many of the minor currencies either. So in this sort of environment, we are taking profits very regularly. So moving forward, you've got your levels here, you've got your triangle, which is come back into play. The break of this could have signaled further downside, however that news release put a stop to that. So we've come back down out of the table, out of the triangle, at the moment, and then a break of this again, 140 level, and we would hope to see a test of this channel down here. So this line here, it's not really a channel line yet, because we've only got 2 points here and here that touch the line. So you need a third point, but that's why the line is there, because it gives us a possible target for our, to create this channel. Moving on to dollar Swiss, and anyone who has been following these videos or following the website knows that we are selling the spikes on this currency, and we have been for months. Now this week we broke the previous record low. This was again on the back of that Moody's credit warning, and also Bernanke's comments. But it didn't just break the record low as it has been, it did the previous time. It smashed the record low and moved another close to 200 pips. So once again, our 100 pip target was reached, with ease. However, we're still happy to take those smaller sized targets. So once again, we'll be looking for the retest of the break of the previous low at 82.30, and then possible downside, or any break above 85.40 is the only time that we will be reconsidering this trend. This is the best example of a trend following situation that you can possibly have. Sell these spikes and ride the trend. And this has been the most consistent trade. it doesn't have the excitement of the euro dollar, for example, but in trading, steady trends like this is really what you're looking for. Okay, cable. So cable was another one this week where after breaking out of the channel, retesting the channel, and then moving lower, the break of this level here at 159.40 was our signal to prepare our short, and the retest of the level was our signal to take the short. Again, 100 pip target, but then we only took half of our profits off this one because of this big head and shoulders here, known as a very good indicator of a reversal. So we thought that there could perhaps be further downside here because there is lots of scope for further downside down to, perhaps here. But the first point of resistance was here, and it immediately bounced, and then the news started coming out for the US dollar, and then once again, it really recovered really aggressively. Now, on Thursday, at the start of the session, when this move down happened back out of this channel, there was some interest in our office to be getting short. However, it's very scary to short the day after a candle of this size. So we didn't take it. However, we are still bearish, and a move down from here to test this level, and then a break of this level, a move down to test this level, and then a move down to perhaps test, I think it's 153.40. So overall, we maintain our bearish stance on cable, but again, taking profits at regular intervals at the moment. Dollar yen. The yen is another currency we need to talk about. So you can see this spike down on the chart here. This happened, this big spike down and subsequent immediate reversal. It happened across all of the yen crosses, so dollar yen, Swiss yen, euro yen, Aussie yen, all of them. And the interesting thing about it, or the suspicious thing about it, is that it happened immediately following 5 p.m. Now, this time zone is traditionally one of the most illiquid periods in the Forex schedule. So some people may suggest that perhaps some dealing desks may have got together and orchestrated this move. Who are we to suggest such a thing? So of course we would never. However, what it has caused is the Bank of Japan to come out on a number of times and make it very clear that they are watching this Forex market very closely. They haven't used the word intervention, and when they've been asked directly, have avoided answering the question. However, what they mean by we are watching the market very closely is we don't want our yen to be any stronger than what it is now. If we have to intervene, we will. Being an export-driven economy, they cannot afford to have their currency so strong it harms their exports. Be very, very careful trading the yen at the moment. The Bank of Japan could intervene at any moment without warning. Alright, one of the minor currencies I want to talk about, because we posted this trade live on the website on Friday, I have had requests about posting live trades. It's not something I want to do on a regular basis. However, I will set up something on the site, and I will post some live trades from time to time. We did it with this one, and you could follow along live. We can see the reversal pattern here. It's almost a head and shoulders, but it is a strong indication of a top here. The neckline is at this point, 127.90. You can quite clearly see it's been tested twice. Now, once we broke this level, I immediately placed a pending sell order at this level, 127.90. However, I was watching the markets because I was quite interested in this move. When it went to retest, which is what I was waiting for, it never reached it. However, it did form a double top, which is another reversal pattern. So as soon as that double top formed, I scrapped my pending order and just took a short at the market price, which I think was 127.40, something like that. As you can see, it then, moved downwards quite strongly. Actually, it dithered around for a while, didn't go anywhere, and then once it got moving, it really got moving. Once again, our 100 pip target was reached, and being Friday afternoon, we took the entire trade. We took it off, took the profits. It did move 60 points further. However, at that point on Friday, we were quite happy with the profit. Now, the Australian dollar has underperformed against its peers being the Kiwi dollar, which is here, you can see, and also the Canadian dollar as well. If we have the Canadian dollar, you can see here. Now, the Aussie dollar, the Canadian, and the Kiwi all have similar risk profiles. So, trading these pairs at the moment is keeping you out of the whole sovereign debt crisis in Europe. It's keeping you out of what's happening in the US. It's keeping you out of possible intervention in the by the Bank of Japan in the yen. So it's it's an opportunity to trade technical analysis. Now, on Friday, what helped this was one of the big banks in Australia, one of the big four, came out and said that they expect the interest rates in Australia to start to fall. So because Australia has such high interest rates, that's what's kept its currency so strong. So it's something to keep an eye on. Possible scope now for this to bounce, because you'd think when it's made an independent move, independent of its partners, its risk, its similar currencies, you would think that it might realign a little bit. So it might give you some more opportunities to get short on some of these pairs. The Aussie dollar against the US dollar. Again, we're seeing weakness even against the US dollar, and even when that big, move away from the US dollar happened, the move for the Aussie dollar was not as strong. We've been seeing this for a while now. The Aussie dollar's strength and its Teflon coating is starting to wear off. This level 107.80 really been defended well by the bears, so I can see them gaining in confidence at this level. You might want to look to the short side from around this level. Finally, let's look at Euro Pound. This was one we took early in the week. We ended up getting out at break even because it didn't really go anywhere. But we do like further short side to eventually test this bottom of this channel. If you have patience, it may be one to look for. Possible entry up around this level. And finally, let's look at the SPX for our risk indication. And we can see that after that big move down on Monday, following on from last week, it was pretty choppy for the rest of the week. And moving on to next week, we have ratings season in the US. Economic releases concerning currencies is pretty light on the ground next week. However, it's rating season, so it really gets going next week. And the indications are that the first few releases have all been positive. So if that trend continues, we could see some strength in the equity markets next week. All right, well, that's it from me. Good luck trading. Don't forget to check the website regularly and keep up to date with all the news and trade carefully. Remember, take profits regularly. See you all next time. Bye for now.